Be it a fund manager or a veteran investor, every stock market expert is saying the same thing. If you want to make money going forward, invest in large caps. The reason is quite simple. Large cap stocks are available at attractive valuations. Now, those who have become serious about investing in the past 4 years may have a portfolio that's heavy on mid and small cap funds. Now, with large caps turning attractive and valuations in mid and small caps continue to be high, it is a good time to rebalance your portfolio. And if you plan to do that, this is a perfect video. Today, we are going to compare the 3 most popular large cap funds. Hello and welcome to ET Money's YouTube channel. Today, we will compare and analyze 3 funds: HDFC Top 100 Fund, Nippon India Large Cap Fund, and ICICI Prudential Bluechip Fund. These funds have delivered impressive returns and seen significant growth in their assets under management. In the past year alone, the Nippon India Large Cap Fund witnessed a remarkable AUM growth of 105%, while ICICI Prudential Bluechip grew by 54% and HDFC Top 100 by 41%. Now, this surge in AUM clearly indicates strong investor interest, which made us dive deeper into these funds. In this video, we'll first analyze their investment style. Then, we will look at their returns and evaluate their performance. By the end, we'll determine if one of the 3 stands out as a better choice for investments. Now, if you are a mutual fund investor, I strongly recommend you watch this video till the end. But before we begin, a quick update. You are watching this video on our English channel. हमारा एक हिंदी चैनल भी है जहाँ पे सारी वीडियोस आप हिंदी में देख सकते हैं. And if you are or know somebody who wants to understand the basic of finance, we have a channel called 5-Minute Finance. I've attached their links in the description section below. Okay, let's start by looking at the investment style of these funds. ICICI Prudential Bluechip Equity Fund follows a barbell investment approach. It invests in stocks trading at decent valuations. However, it doesn't mind paying a high valuation if the company has good growth potential. We looked at this fund's top 10 holdings, and the PE ratios of these companies range from 12.46 to 76. This makes the investment style of this fund growth oriented. The fund also uses an in-house model to pick stocks, which involves bottom-up stock picking. HDFC Top 100 Fund recently had a change in the fund manager. Prashant Jain was the CIO of HDFC Mutual Fund and managed the fund earlier. He left the AMC in July 2022, and Rahul Bajaj has been managing the fund since then. Prashant Jain is renowned for his value style of investing. He invests in stocks with high conviction and gives them time to play. On the other hand, Rahul Bajaj's investment style is growth at reasonable value. This makes the current investment style of this fund growth oriented. Nippon India Large Cap Fund also invests in growth stocks available at reasonable valuations. Broadly, the investment style of all 3 funds is similar. They are focused on growth stocks. Okay, let's look at the market cap allocation for these funds. Market cap allocation indicates whether the fund house is an aggressive or conservative investment style. Now, according to SEBI's mandate, large cap funds must invest at least 80% of their assets in large cap companies. The remaining 20% can be invested anywhere. So, the fund manager can invest in large caps, mid caps, small caps, or debt. How the fund manager deploys this 20% can make a difference to their investment style. The fund can generate better returns if it focuses heavily on mid and small cap stocks. However, it will also make the fund more volatile. So we looked at the market cap allocation of this fund since 2017. HDFC Top 100 Fund had the highest large cap allocation of the 3 schemes. Only some of its assets are in mid caps and the rest are held in cash. There is no small cap allocation. Now for this comparison, let's call the investment style conservative. ICICI Prudential Bluechip Equity Fund invests around 82% of its assets in large cap stocks. Apart from this, some portion is held in mid cap stocks. Although the mid cap allocation is higher than the HDFC Top 100, it's not very high. One thing stands out in this fund: it has about 10% allocation to cash. Overall, the investment stance of ICICI Prudential Bluechip Equity Fund is not very aggressive. Nippon India Large Cap Fund has the most aggressive investment style of the 3. Its mid cap and small cap allocation vary between 10 to 15%. This can help it generate good returns and lead to higher volatility during market corrections. Its cash allocation is also low. This means most of its assets are invested in the market. Alright, Next, let's examine how frequently these funds buy and sell stocks. We looked at the portfolio turnover ratio of these funds. It tells us whether the fund follows a buy and hold strategy or frequently churns the portfolio. If a fund manager frequently buys and sells, this could mean that he or she follows the momentum investing. Now, as of October 2024, the portfolio turnover ratio of Nippon India Large Cap stood at 17. For ICICI Prudential Bluechip Equity, it was 21, and for HDFC Top 100, it stood at 16. These numbers are low. In fact, they are far lower than the category average. This indicates that all three fund managers are following a buy and hold strategy. We also examined the number of stocks these funds hold to determine whether they have a concentrated or diversified portfolio. Now, if a portfolio has a low number of stocks, it would be a concentrated portfolio. In this case, every stock on average would have higher allocation in the portfolio. So a significant movement in any stock can impact the fund's performance. On the contrary, if the fund manager opts for diversification, the impact of a single stock on the portfolio is relatively low. Now we looked at the October end portfolios, and all three schemes have adequately diversified portfolios. To summarize the investment style, I would say they have many similarities. All have a growth-focused investment style, follow a buy and hold strategy, and have diversified portfolios. Besides this, HDFC and ICICI have a conservative portfolio due to their higher large cap allocation. Nippon is relatively more aggressive due to higher allocation to mid and small cap stocks. Okay, let's now examine the performance. First, we examine their trailing returns and compare their performance with the Nifty 100 index and category average. Both Nippon and ICICI large cap funds have outperformed the index and category average in all time frames. The HDFC Top 100 fund also performed better than its peers and benchmark in a 1, 3 and 5 year time frame. However, in the 10-year horizon, it underperformed the category average. The three funds have delivered good returns over the long term. In the long term, Nippon India Large Cap had the highest returns, followed by ICICI Prudential Bluechip and HDFC Top 100. Next, we examined the periodical returns of these funds to see how they have performed year over year. We saw that the performance of both Nippon and ICICI Large Cap funds have been impressive over past 4 years. Both outperformed their peers and the benchmark by a wide margin. Now, the performance of HDFC Top 100 was also good, except for 2024. In 2024, the fund has underperformed both category average and benchmark. Now, one reason for HDFC's underperformance could be its zero allocation to small caps and limited exposure to mid cap stocks. Mid and small cap stocks have outperformed the large cap stocks this year. Now, if we look back a little, all three funds underperformed from 2018 to 2020, and before that, their performance was mixed. So, these funds have done well consistently in the past 4 years, which is boosting their trailing returns. Now, to look at the consistency of returns, we check the 5-year and 7-year rolling returns since 1st January 2013. The average rolling returns of both Nippon and ICICI large cap funds were better than their peers and benchmark in both time frames. However, HDFC Top 100 underperformed the benchmark and the category average. This shows the HDFC's conservative investment style has indeed impacted its performance. Next, let's see how well these funds can contain their downside. For this, we looked at the monthly returns of Nifty 100 TRI since January 2013. Now, there were 54 instances where the index delivered negative returns. Then, we compared the performance of the three funds during those months to see if their downside was better than the benchmarks. Here, we saw that HDFC Top 100 fund fell less than Nifty 100 in only 22 months. This was less than what we expected. The fund had a conservative investment style, but despite that, its downside is not that great. For Nippon's large cap fund, this number stood at 24. We were surprised that Nippon India Large Cap did better than HDFC's Top 100. In the previous section, we saw that Nippon has the most aggressive investment style. So a better downside protection than HDFC Top 100 fund was not expected. Lastly, the downside protection for ICICI Prudential Bluechip fund was better in 41 months. The impressive downside protection could be due to the asset allocation it follows. As we saw in the previous section, the fund has a substantial allocation to debt and cash. This could be helping the fund to cushion its downside during market downturns. So, if we conclude our findings from the analysis, Then HDFC Top 100 and ICICI Potential Blue Chip both have a conservative investment style. HDFC's conservative style results from its high large cap allocation, and ICICI has a high debt and cash allocation. Nippon is the riskiest. It has low debt and cash allocation, and around 10 to 15% of its assets are in mid and small cap stocks. Apart from this, the investment style of all three funds is quite similar. Their stock picks are growth oriented, they don't frequently change their portfolios, and they hold an adequate number of stocks. From a performance point of view, ICICI Potential Blue Chip has done the best. It has good long-term returns, and its downside protection is also the best of the three funds. Nippon India Large Cap's returns are best of the three, but its aggressive approach makes it slightly more volatile than the other two funds. Lastly, we have HDFC's Top 100 Equity Fund. The fund has the lowest returns, and its downside protection is not very impressive either. And with this, we have come to the end of this video. I hope you found the analysis useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.